we'll get started on our last session of today. So our last session, a super exciting topic to be talking about. We'll be talking about open banking, the what, the why, and the how. In this final presentation, TrueLayer's Head of Australia, Brenton Charnley, will explain how open banking payments work, share the key success factors learned by TrueLayer in the UK market, and discuss how and when we can implement open banking payments in Australia. Welcome, Brenton.
Thank you. Afternoon. I'll try to make this as exciting as I can, talking about open banking. So I promise no regulations, no CDR talk, I promise, a little bit. Two topics I'm passionate about, open banking and payments, the what, the why, and the how. Wouldn't be a financial presentation without a disclaimer of some sort. Here it is. There it goes. Prediction. Where are we off to? So we think in the next 5 years, open banking payments will be the default method to pay online. It's going to replace cards, it will replace direct debit, it will replace closed payment systems. It's because it's cheaper, it's easier, it's frictionless, it's very safe, it's secure, and most of the time it's... Am I back? I'm good. So why do we think that? In the UK, this is some of our volumes that's happening right now. So we're seeing some of these signals. From Jan 20 to Jan 21, we saw a 600 times increase in the volume of open banking payments. 600 time increase. In February this year alone, there were 3 times more open banking payments in 1 month than the whole of 2019. So we're seeing a massive change in the volume of these payments. And as projected in the UK, by 2023, 60% of consumers will be using open banking. So a significant change. 36 million people. Yes, 36 million people. So why TrueLayer? So TrueLayer is the leading platform in the UK. We process over half of the volume of all open banking volume across Ireland, Spain, and the UK. We're fortunate just to raise our Series D capital raise, taking our total to 180 mil. Aussie, we're growing. There's about 220 of us now. Just me here in Australia, but hopefully a couple more soon. 3 million customers across UK and Europe. And importantly, we're 100% open banking API. So we don't do screen scraping. We're very focused on this. We see better conversion. And importantly, our payment API, which we're talking about today, converts much better than some of our competitors across UK and Europe, 22%. So what is an open banking payment and why are we so excited about it? It's not actually that difficult other than the change between a push and a pull payment. The ability for a merchant to pull a payment out of a consumer's bank account rather than the consumer having to initiate that payment. It's a simple but a very important change. The pull rather than a push payment. How many people have... I was going to do maybe a poll, but how many people actually use bank transfer online? Does anyone actually log into their bank account? A few. Does anyone use screen scraping online for their payments? Polypay? A few. This is good. How many people are using cards? Is everyone using cards? Wallets? PayPal? Whatnot? And if I say Afterpay or some buy now, pay later. So a good mix. I mean, this is the point. There's so many different payment options, each of them different conversion, different experience, different customer costs, different friction, all changing. But why do we think open banking payments are going to be so much more important? Consumers are expecting a digital-first experience. E-commerce sales are increasing, and as mobile adoption and mobile payments are increasing, particularly with COVID, the idea of using a card or a non-digitally native purchase option reduces conversion and reduces the outcome. And I'll talk about some of those. Platforms are using more and more platforms to engage. Embedded financial services are happening. And I think it's happening in the other session talking at the moment. Platforms are going to be the center for what we do and how we transact online. And debit transactions are much more popular than what they have been before. Credit transactions are decreasing. People are using their money more and want to use their money more. And they shouldn't have to be charged a premium to do so. And on top of that, cards weren't made for online. Cards were revolutionary as a offline payment method. But think about how many people now actually walk out of their house without their credit card or their debit card. Did anyone come down here without it? I almost got on the plane without my card, but it's one of these things. It's like, why are we carrying around these cards, particularly when we transact so much online? Why were they made? And the point being is that they're not made to be used online. Poor UX is a big one. Significant drop-off. If anyone goes to make a payment online, how many people remember their credit card number? How many people know where their wallet is? Even if it is embedded in Google Pay or one of these other options, you still have to find the CVC number, and no one can remember their 3-digit number because you've got about 6 different cards and you're always getting the numerals mixed up, or maybe that's me. High failure rates. Even when you do remember your card, type in the details, there's often a failure, lack of conversion. Fraud's a consistent issue with chargebacks, and of course fees are a significant issue for merchants. Interchange fees have been standardized to some degree, but significant fees which are driving friction, and for merchants, operational cost and cash flow issues to deal with. So how do we see open banking payments stack up? So on this scale, essentially friction versus cost, we look at wallets have really stepped in, particularly over the last 10 years in payments, to try and reduce some of the friction that existed with cards and manual bank transfer. But with that reduction in friction came an increase in cost. PayPal, even now with Bitcoin transactions or cryptocurrencies, are taking a super premium to facilitate that payment, to reduce that friction. And if we go down the bottom, bank transfer is a very cheap way to make a transfer, but what we hear often from our clients is don't take our customers away from our app. And that often happens. Increases churn, reduces conversion, reduces payment flow, bad outcomes. And cards are somewhere kind of in the middle. Expensive, kind of works online. It's our default option right now. And open banking sits at an optimum balance between those things. And we'll talk about how that works. The reason being is open banking payments is a digitally native production. It's designed for now. It wasn't invented 20 years ago. It might take 20 years to get here, but we've got a little bit of time. It converts better, and it uses biometrics, a one-time password, which reduces chargebacks and fraud. It converts incredibly well. We see about 95% success rate in conversion. And because often the payments are routed through a fast payment rail, it's often instant, meaning money is moved, conversion and confirmation is given to the customer and the merchant. Goods can be shipped, customer's happy, merchant has their money. So the people that will see impacted by this, businesses obviously bring down the cost of payments, reduce fraud and chargebacks, and provide immediate liquidity with real-time payments. For consumers, seamless, frictionless payment experience, safer than cards. It's native and delivers a brilliant experience. And for banks, interestingly, replacement of one revenue stream potentially with another, delivering new revenue streams through payment APIs. Where we're seeing this happen at the moment across our client base across UK and Europe at the moment, unsurprisingly, it sits where there's high friction and high cost. That typically is where time is important and the value of the payment is high. Whilst we are seeing take up in the e-commerce and marketplaces, the place that we're seeing mostly is in online share trading and crypto, online gaming, as well as an interesting place that we're seeing in other use cases. What our customers are telling us about it, interestingly, from our experience, at least 1 in 3 customers are choosing open banking payment options across all of our customers. There's a 49% increase in the average transaction value when they do choose open banking payment options. And interestingly, when a customer chooses open banking payments, they never go back. They never change their default payment method. So once they're in that pipe, once they've experienced the frictionless and the cost, merchants are incentivized to use the payment method more so, to prioritize the UX flow. It's cheaper for them and it results in great outcomes for them. So how does it work? So in this is a simple GIF that we've put together. You're inside an app. you look to top up some funds via a bank instant transfer. In this case, use TrueLayer to route to an authorization to select your bank. In this case, I think it's RBS. Yes. You're routed to authenticate in the RBS app. You confirm the account that you want to pay from. This is a first-time user flow. You confirm payment, and you're routed back to the app. So this is obviously a mock-up. I will go through some real use cases of how this actually works. This is a first-time user flow for an account top-up example. So you see on the left that this is obviously mobile, native. In the account, instant bank transfer, easy to select. This is a top-up, but if it was an e-commerce example, you would see the pre-populated purchase price as an example. You'd then go to a bank selection process using the open banking APIs. You're then routed into the bank to do the biometric authentication. Once confirmed and bank account selected, you're taken back to the app. For a returning user flow, it's a lot shorter. The default method selected, and it's very fast. So Revolut's one of our global partners and using open banking payments for us, and I'll go through their use case. So in this case, this is inside the Revolut app. We're topping up £10. I think this is a HSBC routing. We're now in the HSBC bank to authenticate the payment. Payment authenticates, routed back to the Revolut app. Money's in the account. Ta-da. So that is a real-time payment made using open banking payment rails, using one of our customers. Lots of volume that we're processing across UK and Europe. 2 to 3 times higher payment volumes coming in because of the open banking payment rail. And there's a 30% month-on-month increase in people adopting open banking payments. So there's a significant change, and you saw that in some of our payment volumes. This one's a free trade, another share trading app that uses PIS. In this case, I think we're using a different app. This one's a Bank Halifax. Only $1 this time instead of 10. Each bank in this case has a slightly different authentication. So you saw something a little bit different with the Halifax versus the HSBC. Funds are in the account. Similarly with them, 60% of customers are choosing open banking payment, a 20% increase in the average transaction volume. And for those payments people in the room, reduced unallocated deposits and reconciliation. So a significant improvement in the back-end compliance and reconciliation. I feel like I'm flying through this. We'll have plenty of time for questions. So this is the UK, Europe, PSD2 regulations. Obviously, we're not here yet in Australia. I'd like to call out, I'm not having a session on the Pay2 platform, the MPS. I think there's a session happening on that soon. There is a session tomorrow on the PIS, I think invite-only roundtable, where we can get into some of these design principles. We'll be bringing some of this, so please, participate in those forums. Important that we talk about this a bit more. But what I thought I'd do is I'd end on a bit of a question or perspective. We don't know where it's going to be yet. Obviously, the mandated payment service or Pay2 is being delayed a little bit, but I thought I'd put up a couple of comparisons. So let's just talk through that. Both are obviously API enabled. Difference being is that you would connect directly with the mandated payment service, as opposed to in the UK, you integrate directly with each bank's APIs, and this is where TrueLayer comes in as an aggregator in this case. Both are pool payments or merchant-initiated payment initiation type payments. Licensing to access the mandated payment service would need to go through AFSL obligations. I'm assuming we'll have a CDR license, or we're advocating for a specific license for payment initiation in Australia under the CDR. There's no intermediary for the actual payment facilitation under payment initiation, whereas in Australia that's routed through the NPP in this case, or managed or facilitated by that. that means ultimately the rails are much harder to access under that versus what it is in the PIS in UK. This is a question, I think this is probably a big question. The speed in this case, often it's important that we see that customers don't always need the payment to be made fast. In fact, the fast comes with a premium, so it gives the ability to give choice to consumers, fast or slow payments, and I think that's really important. So for example, what's important in this case is the payment initiation, not necessarily it has to be fast all the time. So again, I don't know how the routing or rerouting is going to work in Australia under the MPS. Maybe Christian, you might know what's going on with this one, but will it go through direct entry or will it always be through NPP rails as an example? Where's the failure and how that's going to work? And again, questions that we're seeing in the UK, the cost is significantly cheaper than cards. We're not yet seeing how that's going to play out yet in Australia. Is there going to be higher costs? How is that going to work? Is it a premium feature? Is it wholesale funding rates? How is that going to happen? So it's all a question at the moment in terms of how it's going to look. Obviously, there's a lot of conversation around payment initiation, right access that's happening. So we look forward to the session tomorrow. In terms of where we're going for TrueLayer. So this year we'll be launching our data API under the consumer data right, working with a number of our global clients and local clients on a number of use cases. Coming up, if of relevant to you, is the agency and sponsorship model. This is something that we do. We sponsor a lot of our clients in the UK. So do reach out if it's something that's interesting. We're waiting for the legislation to come out in the next couple of weeks from the ACCC and Treasury, I should say. So we're really looking forward to that, to the Treasury team. It's exciting, and I think for aggregators or intermediaries like TrueLayer, it actually plays an important role. We can help participation increase, and we've seen that in the UK. 90% of the volume flows through intermediaries in the UK. So we play a significant part, and it's a point in time we can help to make this happen and make the CDR successful. We really want payments to happen. Obviously, we'll be looking to work with the Pay2 platform, the mandated payment service, and then we're also looking to extend new products as we launch. So we have a roadmap. We're currently hiring at the moment, so looking forward to building the team here in Australia. And that's kind of it from me. I think I've absolutely flown through this content, which gives plenty of time for drinking and or questions. So I'm happy with either. If anyone wants to throw me drinks instead of questions, lob me a champagne. But yeah, that's it from me. I welcome any questions or thoughts or feedback. Thank you.
Thanks, Brenton. We do have a few minutes for questions. So does anyone in the audience have a question? We've got some roving mics we can hand around. Yep, one over here.
Hey, those UI flows are really nice. Do you guys offer them as embeddable components like a Stripe does, like via an iframe or something?
Yes, we've got, well, that was a bit louder. We've got multiple ways that we can do that consent flow. Yeah, awesome. So full standardized or full customized.
Cool, thanks.
Was looking the wrong way. Hi, I'm Trev from Split Payments. I really enjoyed that presentation, by the way.
Thank you,
thanks
mate.
for that. I saw there on your roadmap in that 2022, you're looking to have Pay2. Given that Pay2 and open banking is completely detached here in Australia currently, where on your roadmap would you say that actually using payment initiation within open banking will fit?
There's a reason why it's not on there. We don't know. I mean, it's working with Treasury, facilitating. I mean, I think the future direction report will be a response back from the government towards the end of this year, I believe, without saying what the response time is, but that's my understanding. So, I mean, we would love it to happen. We know that it works. We know that it delivers incredible consumer outcomes. We'll be participating in every payment initiation discussion to make sure that we can improve on what's happened in the UK, because there's definitely improvements on what happens here. So we'd love it to be here in 2022, but I suspect it will be 2023 would be my projection at this current point in time.
Thanks for that.
Anyone else have a question? Yep.
This is going to be a hard one, I can tell.
Not at all.
I'm waiting for it.
How does Australia compare to other markets in which TrueLayer is? So one seems to be how far technology has come, but in terms of maybe awareness of the benefits and other things, are we an outlier? Are we in the fold?
Do you mean from consumers or this kind of cohort, like
You answer as you see fit.
FinTechy people? I think we all want it to happen, and often we're a fast follower to what's happening in the UK. I think it will move a lot quicker. The fact is we are more digitally native and transactions in other markets. So I think once we do get there, I think that'll help. From open banking, our CDR regs are already better than what we have in the UK under the data product. So I'm hoping that can flow through to the PIS or the right access. The fact that we have an economy-wide framework, or we've had these discussions in the digital economy strategy that's come out, I think is incredible. The fact that we're already talking about new industries and we've got a consistent framework. The UK is only just having that conversation under open finance. So we've got open banking in the UK. There's a whole new thing around open finance. And for those of you who've seen my many LinkedIn posts, you would have seen the acronym bingo, I think it was, from our head of policy. Let's not come up with another acronym for open finance. Let's just keep it open finance or open banking. But, I think we're at a better point than where the UK was. What we need to see is getting data right in banking first before we move into payments, and I think that's fundamental for the success. I think if we do that well and we can get use cases and significant use cases moving, I think payments will come very quickly. We know that we've seen more adoption whilst we do a lot of data volume. We are seeing more people interested in payments faster than what they did with data. So, I think we have an opportunity, and I'm very welcome to the mandated payment service from NPP. Right, whilst we don't have a framework for PIS in Australia, it's a perfect interim solution, is what I would say.
Great. Well, thank you so much, Brenton. It was a great session on open banking and super exciting times to come in Australia. Well, that concludes the first day of Intersect. So it's time for drinks. So please feel free to make your way out, and thank you so much for joining us today, and see you tomorrow.